Hello and welcome to Livewire Markets. My name is Anna Dadich. Today I'm joined by Alex Wise, who is a non-executive chair of the Trustee Board of private credit manager Keyview. He's going to be talking to us about the private credit landscape in light of the recent ASIC review into the space. Welcome, Alex.
Thanks, Anna.
Alex, just by way of background, can you tell us a little bit about your role at Keyview and what's been happening with ASIC's review of private credit?
Sure. So I joined Keyview almost 2 years ago as a non-executive director. So my role was to come on to their trustee board, which is run as an independent trustee board internally to Keyview, and to handle all governance, risk and compliance aspects of the oversight of that trustee board.
So what are the key areas of concern that ASIC has called out?
ASIC has called out a number of areas of concern, primarily around fees, primarily around transparency, and also valuation. So those three areas have been concern to ASIC as they have gone and reached out to the market. They've done surveillance and reviewed a number of private credit firms across both retail and wholesale, and have really come to the conclusion that these are areas where the industry can do better, and they have significant concerns on behalf of investors.
Alex, how have private credit managers received the review?
I think there's been a significant number of private credit managers who have received this review very, very well. And that really comes down to three reasons. Number one, because they really don't want to be tarnished and associated with some of the poorer quality operators in the space. Secondly, because I think the good managers out there want to be at the forefront of governance, risk and compliance outcomes. And finally, because being part of this landscape, particularly within private wealth and institutional money, where you are looking after other people's wealth and you have to do the best on behalf of your clients.
Mm-hmm. Is ASIC likely to issue new regulations or pursue some other route to better practices?
It's a really good question, Anna. I actually heard a speech from a member of ASIC a few weeks ago where they addressed this head on. And what they said is that private credit, when done well, has great attributes to offer to the Australian market and the wider economy. But that phrase, when done well, is really the key to it. ASIC has called out a bunch of practices which they do not consider best practice and don't consider to be in the interests of investors. And it's those practices that ASIC will be taking a closer look at. And I think that reading between the lines, they will be doing that through enforcement of existing regulations rather than imposing new regulations at this point on the private credit sector.
Okay. Can you talk a bit more about what aren't the best practices that they're really focusing on?
Sure. So to go back to those fees, number one, ASIC are very concerned about transparency in fees. And it's something that at Keyview we've really given a lot of thought to and are very straightforward in terms of how we charge our fees. Anything outside of the management fee should be accrued to the fund, and that is institutional best practice in private credit. Secondly, valuation, and the valuation of assets, particularly private assets, is something that does concern ASIC because you don't have the transparency in private markets that we have in public markets where we have exchange traded prices. So that's something that causes a lot of concern. And again, something at Keyview where we spend a lot of time and have also recently appointed a valuation consultant to help us make sure that we're striving for the best outcomes for investors. The final area of concern for ASIC is transparency more generally, particularly around disclosures of what's in the portfolio. Are there any impairments? And I think this is an area where across the industry, some managers have been a little bit cautious about what they disclose, and partially because some of those outcomes may well turn up in the financial press and not promote the best interests of transparency. But again, at Keyview, we try to communicate with our investors through our communications and also through one-on-one meetings as they conduct their due diligence on us.
So Alex, as someone who's been in the space for more than 20 years, can you share any war stories from your due diligence work?
Sure. I started doing due diligence in hedge funds in the early 2000s in London. And like many investors, at that point we had exposure in our book to Bernie Madoff, the king of the Ponzi scheme and fraud. So we brought in a due diligence program that was really around doing consistent due diligence on all managers within the portfolio. And there were a number of managers that just didn't meet the standards. So what we did with that was basically go back to the investment committee and say, okay, every month you have to sign off on these managers as not passing our due diligence. What eventually happened was that they just kind of got fed up with it and redeemed out of Madoff before the inevitable disaster came to happen. Now, that's not to say that we knew it was a Ponzi scheme, but it just tripped enough red flags to know that something was off.
What do you see as the biggest opportunities and challenges for private credit in Australia over the short to medium term?
I think there are a number of challenges that will inevitably be there. Challenges around origination, challenges around cyclicality across industries. But ultimately, what the recent review of private credit has done is create opportunities for managers that have in place good, strong governance, risk and compliance frameworks. And I think that that's very important, particularly from an investor's standpoint, where they really should be able to place some trust in their investment fiduciary to be able to do things that are in their best interests and create an alignment of interest. So I think for managers that put in place, strong controls around valuation, good transparency, and very straightforward fee elements, that there will be great opportunities to grow their client base. As primarily, a lot of investors have got very comfortable with the good things that private credit can do and the return profile that it offers, but you have to have the manager that's going to be there for you, provide those risk and compliance protections.
Mm-hmm. So finally, let's focus a little more on Keyview. What are you doing to enhance your approach?
It's an ongoing evolution. Over the past couple of years since I've been involved, we've really stepped up, beefed up our risk and compliance committee, given the Trustee Board a majority independent structure. We've appointed a service provider in relation to reviewing our valuations. We've onboarded a global best-in-class loan administration service to bring real integrity to the data and administration of the loans. So I think amongst all those things has kind of been a good start for us, but we'll continue to kind of keep advancing and making sure that, again, that we're putting those governance, risk and compliance outcomes as a central and important part of what Keyview does.
Thanks, Alex, for sitting down with Livewire today.
Thanks, Anna.
If you enjoyed that interview, give it a like and don't forget to subscribe to our YouTube channel. We release new content every week.